Real Estate Finance Practice Test. Question 1. A closing agent is reviewing a cooperative unit in Laurel. Which term describes a standardized expression of the cost of credit that includes interest and certain finance charges? Option A, equity. Option B, debt minus to minus income ratio. Option C, deed of trust. Option D, annual percentage rate. The correct answer is option D, annual percentage rate. It is not necessarily identical to the note interest rate. The figure helps consumers compare loans with different fees and rates. Required calculation rules determine which charges are included. Question 2. At a financing review, a Maryland exam candidate encounters the following description: the percentage relationship between the loan amount and the property value used by the lender. Which concept is being tested? Option A, loan minus to minus value ratio. Option B, defeasance clause. Option C, Ginnie Mae. Option D, amortization. The correct answer is option A, loan minus to minus value ratio. The ratio is calculated by dividing the loan by the applicable value or purchase minus price measure. Lenders use the measure to evaluate collateral risk and insurance requirements. A lower ratio generally means the borrower has more equity in the transaction. Question 3. Wendy is assisting with a warehouse transaction in Silver Spring. Which principle applies when the facts involve the combined housing payment components of principal, interest, taxes, and insurance? Option A, mortgage. Option B, PITI. Option C, annual percentage rate. Option D, VA minus guaranteed loan. The correct answer is option B, PITI. Escrow accounts commonly collect the tax and insurance portions. Lenders use the total to evaluate the borrower's recurring housing obligation. Association fees and mortgage insurance may also be considered in underwriting even though they are not part of the acronym. Stressed about your Maryland real estate? We can take Maryland real estate for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done. Question 4. Which answer most accurately identifies a mortgage loan not insured or guaranteed by a federal housing program in a real estate transaction? Option A, FHA minus insured loan. Option B, loan minus to minus value ratio. Option C, conventional loan. Option D, secondary mortgage market. The correct answer is option C, conventional loan. Private mortgage insurance may be required when borrower equity is limited. The loan can be conforming or non-conforming depending on applicable standards. Private lenders set underwriting standards subject to law and secondary minus market requirements. Question 5. A question arising during lease negotiation concerns pledging property as collateral while retaining possession and use. Which choice gives the best classification? Option A, debt minus to minus income ratio. Option B, adjustable minus rate mortgage. Option C, promissory note. Option D, hypothecation. The correct answer is option D, hypothecation. The concept differs from transferring full ownership to satisfy the debt. Default can allow enforcement against the collateral under the security instrument. The borrower grants a security interest without physically delivering the real estate to the lender. Question 6. While analyzing a single minus family home, Owen must apply the concept involving the federal credit law requiring clear disclosure of borrowing costs such as annual percentage rate and finance charge. Which answer should be selected? Option A, TILA. Option B, mortgage. Option C, debt minus to minus income ratio. Option D, adjustable minus rate mortgage. The correct answer is option A, TILA. The goal is meaningful comparison of credit terms before the consumer becomes obligated. Certain residential credit transactions also carry rescission rights. The law regulates disclosure of credit cost rather than property condition. Question 7. Which real estate term is defined by prepaid interest equal to 1% of the loan amount? Option A, Fannie Mae. Option B, discount point. Option C, conventional loan. Option D, prepayment penalty. The correct answer is option B, discount point. The dollar cost depends on the principal amount rather than the property price. Borrowers may pay points to obtain loan pricing offered by the lender. Points should be distinguished from origination charges and down payment. Question 8. In a transaction involving a waterfront parcel, which rule controls when there is the owner's value interest after subtracting liens from the property's market value? Option A, deed of trust. Option B, fixed minus rate mortgage. Option C, equity. Option D, annual percentage rate. The correct answer is option C, Equity. The owner's net value can increase through principal reduction, appreciation, or improvements. The amount is not the same as cash flow or taxable income. It can decline when market value falls or additional debt is placed on the property. Are you looking for Maryland real estate actual questions? Visit our website pokerexams.com to access Maryland Real Estate Study Guide with actual questions and answers. Scan the QR code or click the link in the description to get Maryland Real Estate Answer Key today. Question 9. A associate broker asks about coverage protecting a conventional lender when the borrower has a high loan minus to minus value ratio. Which answer provides the legally accurate concept? Option A, promissory note. Option B, TILA. Option C, mortgage. Option D, private mortgage insurance. The correct answer is option D, private mortgage insurance. Cancellation rights depend on law, payment history, and the remaining balance. The premium compensates the lender for part of the default risk. It does not protect the borrower from foreclosure or eliminate the debt. Question 10. Victor encounters a security instrument creating a lien on real estate to secure repayment of a loan during a property minus management audit. Which principle should guide the analysis? Option A, mortgage. Option B, VA minus guaranteed loan. Option C, loan origination fee. Option D, prepayment penalty. The correct answer is option A, mortgage. Foreclosure procedures may be used if the obligation is not performed. The debt itself is evidenced by a separate repayment promise. The borrower retains ownership while granting the lender a security interest. Question 11. Which choice best matches the description? A loan with an interest rate that remains unchanged for the stated term? Option A, FHA minus insured loan. Option B, fixed minus rate mortgage. Option C, due minus on minus sale clause. Option D, amortization. The correct answer is option B, fixed minus rate mortgage. The borrower trades rate certainty for the pricing available at origination. Taxes, insurance, and association charges can still change the total monthly housing expense. Principal and interest payments are predictable when the loan is fully amortizing. Question 12. During review of a subdivision lot in Cumberland, the parties discuss the borrower's written promise to repay a debt under stated terms. Which term applies? Option A, TILA. Option B, prepayment penalty. Option C, promissory note. Option D, acceleration clause. The correct answer is option C, promissory note. This document establishes the personal obligation, interest rate, payment schedule, and maturity terms. It is separate from the instrument that pledges real estate as security. The lender may enforce the debt according to contract and applicable law. Question 13. An exam scenario presents a mortgage provision requiring release of the lender's security interest when the secured debt is fully paid. Which answer is most accurate? Option A, RESPA. Option B, due minus on minus sale clause. Option C, Freddie Mac. Option D, defeasance clause. The correct answer is option D, defeasance clause. The borrower is entitled to evidence that the encumbrance has been discharged. Satisfaction of the obligation removes the lien created by the security instrument. The provision protects clear title after repayment. Question 14. A licensee preparing for a financing review must recognize a government-sponsored enterprise that purchases qualifying residential mortgage loans in the secondary market. Which concept does this describe? Option A, Fannie Mae. Option B, balloon payment. Option C, due minus on minus sale clause. Option D, RESPA. The correct answer is option A, Fannie Mae. Its activities support liquidity and standardization in housing finance. Loans must satisfy applicable eligibility and documentation standards. The organization does not usually make retail home loans directly to individual buyers. Question 15. Which answer correctly classifies a situation involving the federal law addressing settlement minus service disclosures, escrow practices, and prohibited referral arrangements for covered mortgage transactions? Option A, loan origination fee. Option B, RESPA. Option C, balloon payment. Option D, discount point. The correct answer is option B, RESPA. It does not set real estate commission rates or guarantee loan approval. Covered consumers receive information about loan and closing costs through required disclosures. The law restricts kickbacks and unearned fees connected with settlement services. Question 16. At an offer review in Salisbury, Gavin explains a loan whose interest rate may change according to an identified index and margin. Which real estate principle is involved? Option A, loan origination fee. Option B, balloon payment. Option C, adjustable minus rate mortgage. Option D, Ginnie Mae. The correct answer is option C, adjustable minus rate mortgage. Payment amounts can rise or fall as the rate changes. Borrowers should understand the initial rate, adjustment rules, and maximum exposure. Rate adjustments occur at stated intervals and may be limited by periodic or lifetime caps. Question 17. A transaction file for a duplex raises an issue involving a security instrument involving a borrower, lender beneficiary, and trustee. Which answer best resolves the classification? Option A, equity. Option B, fixed minus rate mortgage. Option C, Freddie Mac. Option D, deed of trust. The correct answer is option D, deed of trust. The borrower's repayment obligation remains in the promissory note. State law determines the foreclosure process and the parties' precise rights. The trustee holds authority connected to the security arrangement for the benefit of the lender. Question 18. Which concept should a buyer apply to facts involving gradual repayment of a debt through scheduled installments of principal and interest? Option A, amortization. Option B, secondary mortgage market. Option C, fixed minus rate mortgage. Option D, TILA. The correct answer is option A, amortization. Each payment is allocated according to the loan terms and remaining balance. Early payments on a level minus payment loan usually contain more interest than later payments. Full repayment occurs at maturity only when the schedule completely reduces the balance.
Stressed about your FCLE? We can take FCLE for you remotely and undetected. We always guarantee a pass in payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done.
Question 19. Yasmin is studying a rule concerning the market in which existing mortgage loans are bought and sold after origination. Which term should be chosen? Option A, acceleration clause. Option B, secondary mortgage market. Option C, VA minus guaranteed loan. Option D, prepayment penalty. The correct answer is option B, secondary mortgage market. Investors evaluate the credit and payment characteristics of the loan pools. Loan sales replenish lender funds and support continued lending. The borrower generally continues making payments to the designated servicer. Question 20. When a vacant parcel transaction involves a federal corporation that guarantees securities backed by qualifying government-insured or guaranteed loans, which answer identifies the controlling concept? Option A, balloon payment. Option B, RESPA. Option C, Ginnie Mae. Option D, Regulation Z. The correct answer is option C, Ginnie Mae. The guarantee supports mortgage-backed securities containing approved loan types. Its role concerns the securities rather than direct consumer lending. The organization does not buy conventional mortgages in the same manner as the major sponsored enterprises. Question 21. A practice question describes a charge imposed under the loan terms when principal is repaid before the permitted time. Which response is best? Option A, promissory note. Option B, balloon payment. Option C, mortgage. Option D, prepayment penalty. The correct answer is option D, prepayment penalty. Borrowers should review the note before refinancing or selling. The provision compensates the lender for early termination of expected interest income. Its enforceability and disclosure are controlled by law and the loan program. Question 22. During a property-management audit, which principle is illustrated by a loan provision allowing the lender to demand repayment when the secured property is transferred without permitted consent? Option A, due minus on minus sale clause. Option B, debt minus to minus income ratio. Option C, private mortgage insurance. Option D, secondary mortgage market. The correct answer is option A, due minus on minus sale clause. Federal and state rules may create exceptions for certain transfers. A buyer should not assume the existing financing can remain in place. The clause limits the borrower's ability to transfer the property subject to the existing loan. Question 23. Which answer states the concept associated with a mortgage made by an approved lender and insured by the Federal Housing Agency? Option A, amortization. Option B, FHA-insured loan. Option C, acceleration clause. Option D, loan minus to minus value ratio. The correct answer is option B, FHA-insured loan. The government does not directly lend the purchase funds in the ordinary transaction. Borrowers pay required mortgage insurance charges and must satisfy program standards. The insurance protects the lender against qualifying borrower default. Question 24. A buyer representative handling a retail suite in Ocean City must identify a mortgage program providing an eligible veteran borrower with a federal guarantee benefit. Which choice is correct? Option A, defeasance clause. Option B, Freddie Mac. Option C, VA-guaranteed loan. Option D, balloon payment. The correct answer is option C, VA-guaranteed loan. The guarantee reduces lender risk and can permit favorable financing terms. Eligibility and property standards must be satisfied. The program is not a direct grant of the purchase price to the borrower. Question 25. During a contract revision for a historic residence in Colombia, Imani needs to identify the rule described as the percentage of gross income committed to qualifying monthly debt obligations. Which answer applies? Option A, conventional loan. Option B, Fannie Mae. Option C, fixed minus rate mortgage. Option D, debt minus to minus income ratio. The correct answer is option D, debt minus to minus income ratio. The measure helps evaluate repayment capacity rather than collateral value. Lenders compare housing expense and total recurring debt with income. Program guidelines determine which debts and income sources are included.